Welcome to National Bank of Arizona's Economic Briefing and Market Update. My name's Brian Gordon. I'm a principal with a company called Applied Analysis. Today we're here to talk about economic competitiveness in the state of Arizona. We're all off to a start to the new year and looking forward to what is in store for us going forward. We thought this might be a good time to talk about what we're seeing from the fundamentals of the economy, what others are seeing in terms of Arizona's positioning relative to other states in the nation. And so why don't we go ahead and jump into some of the details that we've been tracking and thought it would be important to share this information with you here today. Really have three primary topics that I would like to cover and walk through with you today. One is, as I mentioned, economic competitiveness, the overall fundamentals of the economy. I think tax competitiveness goes hand in hand with that in terms of what we're seeing from a tax structure standpoint, thinking about corporate income taxes, individual taxes, property taxes, sales taxes, all of that informs the public and an overall investment in the marketability and competitiveness of places like Arizona. I also want to close out with a little bit about the cost of living and how that stacks up to other major markets and where Arizona, in particular, the metro area of Phoenix, Arizona, is positioned. So I want to jump into the economic competitiveness question. What drives the competitiveness of a state's economy and its overall business environment? To take a look at some of the details behind that, we often refer to this annual publication called Rich States, Poor States. This is a publication that's pretty comprehensive and ranks the economic competitiveness of states using 15 overall variables. It's published by the American Legislative Exchange Council Center for State Fiscal Reform. This is really relied on by a number of legislators that are also heavily involved with this nonpartisan voluntary membership organization. Some of the key factors that they focus their time and attention on relates to a number of the fundamentals of the economy. They have Arizona ranked fourth overall in terms of economic performance or its competitiveness. And let's just take a look at some of the key details that they focus their time and attention on. One is GDP growth, that gross domestic product, or the overall gains in the broader economy, migration from domestic locations into the state of Arizona. Job growth is really important. So I want to just touch on each one of these briefly. We've seen significant growth in the Arizona economy. There's no question about it, expanding by over 66% during the past decade or 2 decades of reported information. So we've seen phenomenal growth there. And if we sort of look at it cumulatively, we can see how we've trended over time, outpacing the national average. And when we look at its overall rankings on a cumulative basis, you can see to the far right, we're starting to edge our way up, ranking 9th in the nation. All of these gray lines represents each one of the states in the union, so you get a sense of where we stack up in Arizona. And if we look at it a little bit of a shorter time frame over the last 10 years, you can really start to see some of that expansion that's been taking place, nearly doubling up where the United States economy is performing from. And that puts us in a leadership position, ranking number 6th overall, compared to a number of the other economies in the nation. And then year by year, again, you get the idea. We've been outpacing the nation as a whole for a number of years, and just on par during the last reported year of 2023, the full sort of financial picture as it relates to GDP growth. Domestic migration's another area. We've seen nearly 35,000 people in the last year migrate into the state of Arizona. You kind of see how that ebbs and flows at different points in time. We've seen a little bit less mobility over the last several years coming out of the height of the COVID pandemic, as people have been tied to their houses, more a function of inflation and the resulting elevated mortgage interest rates. A little bit of that lock-in effect has a little bit more stability, or people staying closer to where they were. In addition to that, international migration has been pretty significant and has been driving a lot of the growth that we have seen, in much different picture in the last couple of years in terms of the mix of who's coming into the state of Arizona. Again, U.S. Census Bureau data tracking exactly what folks, where they're coming from and where they're going to. So we can keep an eye on this trend going forward, but you can kind of see the mix here. Domestic migrants over the last decade or so compared to international is a much different picture than what we've seen in the last year or so. And you can see that international migration has really trended up in the last 3 years on the left side, and you can see it's been a national trend as well in terms of folks moving in. But what that brings us to is really the overall population base in the state of Arizona, about 7.6 million residents, growing at about a 1.5% growth rate overall. That ranks the state number 10 across the country in the last year. You can see the national average is hovering about 1%, and you can kind of see some of the leaders, Washington, D.C., no surprises there in terms of the changeover and what we're seeing there. Florida, Texas, Utah, so forth and so on. And if we look back over the last decade, Arizona in the top 10, standing at number 9 overall. And if we take a look at incomes and where people are coming from into Arizona, these are the latest data that are reported by the IRS, but you get a sense of what we're seeing here from an in-migration standpoint in terms of the overall incomes. This is really important. About just over half of the incomes are originating from the state of California, about $2 billion coming our way into Arizona. The final element I wanted to walk you through as it related to this particular index is the employment growth. This is important to monitor. We ranked number 4 overall, growing by about 26% during the last decade, only falling short of states like Idaho, Utah, and Nevada. The overall U.S. average is about half of what we were reporting in the state of Arizona. And if we look at the job counts, we're at an all-time high in terms of 3.3 million people working in the state. And if we look at where we are just on a year-over-year basis, we rank in that top 10 again, growing at that 1.8% ahead of the national average there. And some of those similar states experiencing some strong overall employment growth. And we look at it by sector, a little difficult to read here, but what the whole point or the intention is to demonstrate which sectors of the economy are growing a little bit faster than others. You can kind of see it moving left to right by month. The darker red areas seeing more robust growth, cooler growth in some of those bluer areas, but mining and logging in percentage terms has been up. Private education and health services has also been pretty strong on a year-over-year basis. If we take a look at just point in time, again, you can see what some of those growth rates look like, but in absolute job counts during the last year in Arizona, we've added nearly 60,000 jobs. And nearly half of those are really in that health and education sector, primarily health-related services that are contributing to that. We see some government additions and then trade, transportation, utilities, which are really your warehousing jobs, retail jobs that are contributing to some of the gains we're seeing there. Employment is one of the top primary reasons that people cite why they move into the state of Arizona, and that's true in a number of markets. It's really economic opportunity for some. And so if we look back a little bit further in terms of the migration trends and then the overall employment growth, you can see where we were at in 2019. You see a lot of red to the right of the board. Construction is really, over the last 5 or 6 years, been contributing to the job base. Private education and health services, once again, and similar categories in terms of where you're seeing the bulk of that growth coming in. And what that's done is help to drive down the overall unemployment rate, really on par with where the national average is at just under 4%. So that's economic competitiveness. I think the other element that is really critical, there's a new report out by the Tax Foundation that focuses on tax competitiveness. They've taken a ranking approach to a number of public revenue or taxes on a state-by-state basis. And this can be really important when we're talking about business investment or business attraction into Arizona. And so we want to take a look at what this looks like. Arizona ranks now 15th overall from a tax competitiveness standpoint. Pretty positive from that perspective. I'll walk you through some of the details, but you can see some of the higher ranking states from a tax perspective, what they look like and where they're located. Obviously, you see California, states like Washington, they've got relatively unfavorable tax environments, and part of the reason we continue to see folks migrate into Arizona. If we look at those rankings by year, you can see we've edged up just a couple over the last couple of years. But the key components I'm going to walk you through here relate to these sort of 4 primary public revenue or tax sources that exist in the state of Arizona, and you can kind of see where they're ranking. I'm going to walk you through each one of these real quickly here to give you a sense of corporate tax competitiveness. Ranks 13th overall when we look at where it stacks up relative to the nation as a whole. Pretty stable from that standpoint in terms of its overall ranking, although it has improved from the overall income tax rate as the state made a conscious decision in the 2017 timeframe to lower that overall corporate income tax rate down to 4.9%. And that was really sending a signal that Arizona was open for business at that time. And what we've seen since then, pretty dramatic increases in terms of the number of private establishments that exist. You can see we're tracking almost 218,000 private establishments in the last publicly reported year. And you can see some of the gains there, the growth in the number of businesses that exist, a much different contrast from where we were sort of in that post-Great Recession period. And then ultimately you see that color shift when we saw a change in the overall tax environment from a corporate tax standpoint. The annual average gains in terms of the number of businesses, we've added nearly 10,000 a year since we've seen that shift in the overall corporate income tax rate. The number of private establishments, the growth rate has been pretty strong as well, averaging about 5.5% during that time frame as opposed to 1.7. Obviously, the prior period includes the negative impacts of the Great Recession. And so we saw that much slower growth coming out of that particular cycle, but nonetheless lines up pretty well with when we saw the corporate income tax change. That's brought a lot of businesses into the state, a lot of folks expanding. Some of these we've talked about in the past in prior webinars, but again, important that we've seen some major investments take place in Arizona. We've added over 63,000 jobs since that shift has taken place, and major growth in a number of sectors: information, professional and business services, financial activities. But the biggest contributor in terms of the absolute number of companies is really this professional and businesses services sector. We added about 6,000 new companies during that particular time, new establishments, not just businesses, but those with multiple locations coming in and expanding in the state of Arizona. Manufacturing has also contributed. And we've also just seen a massive amount of private sector investment during the last several years. And a lot of that concentrated in and around the Maricopa County area, Phoenix area. You get a sense of the types of industries that you're seeing on the screen here. I don't need to talk too much about the semiconductor industry that we've seen massive investments there, but clean power, some of the other ones that are big contributors to what's happening in Arizona. The Phoenix MSA market area ranks fourth best city for foreign businesses based on some of the trends that we've seen there. That's was reported by the Financial Times. And obviously TSMC has been key to all of that semiconductor manufacturing activity that we've all been heard all about. So we also have a number of international companies that are coming into the region and setting up shop, not necessarily corporate relocations, but adding a new office or a new location right here in the state of Arizona, many of these in the Phoenix market area. Besides these larger, more significant international players, it is pretty important to highlight small businesses that are continuing to move in. They are really key to what's happening from an economic perspective. And if we look at just the growth rates on the left for Arizona, but on the right for the United States, you see some pretty big numbers here since 2014. But if we look back over the last year, these are the latest published data. You can see the small business growth in Arizona has basically doubled up what the United States average is doing. So it's expanded by about 5.8% in Arizona and about 2.9% in the U.S. overall. The second element of the Tax Competitiveness Index focuses on individual income taxes, where Arizona ranks 8th overall. There are really 14 states that have some sort of flat individual income tax, and Arizona is offering the lowest among those states. And so we rank 8th overall. That has improved from where we were as we saw some shifts in the overall tax rate, now at about 2.5% overall for individuals. That contributes about $1 out of every $5 in terms of the public revenues at the state. And you can see where that stacks up relative to other markets throughout the country. The U.S. average is at about 33% contributions from individual taxes, the average of the states you're looking at. We've got a handful of states to the left of the graph: Alaska, Florida, Nevada, South Dakota, Texas, Wyoming, and Tennessee, that do not have an individual income tax liability for its residents. So you kind of see we're pretty well positioned on this end of the spectrum. Saw a little bit of a drop in those collections as the rate adjusted. That's really a function of rate and not the base. Personal income has been up about a half, it's at about a $500 billion right now, increasing by about 7%. Average growth over this decade was about 6.5%. Per capita personal incomes have also been up, and you can kind of see what that looks like and where that's tracking. And then disposable personal income in Arizona has been up almost 9% in the last year, hovering around $56,000 per capita. Arizona does rank fourth nationwide for growth in per capita disposable income over the past decade. So pretty strong growth in terms of those income dollars that we're generating from our local residents. And you can see where we rank during the last decade, only behind a couple of states in the western portion of the United States, Utah, Oregon, and Colorado. So doing really well from an income growth standpoint. Here's one where we don't rank so well. These are our sales taxes, our excise taxes, privilege taxes. The state here ranks 45th out of the country, so pretty low rankings on this spectrum. You can kind of see where that looks like, and that includes our state sales tax combined with the local average sales tax rates throughout the various counties and jurisdictions. That puts us with the 12th highest combined sales tax rate overall at about 8.4% on average. Sales taxes are the top source of revenue for 32 states, including the state of Arizona. So these orange states depict those that really rely on that sales tax revenue. That is the largest segment of their public revenue sources. You've got 11 states with individual income taxes that are the highest. No surprises there on the West Coast, and then some states that generate their revenues from other areas. Then where we stack up overall, this is about 2/3 of the overall revenue coming from our sales taxes, and you can kind of see the average across the nation as a whole is at about 46%. Transaction privilege tax, just what I'm talking about here, is about a base of about $200 billion, continuing to rise a few percentage points on a year-over-year basis. And some of these key sectors here, personal property rentals, the tax that's on some of that rental-related activity, bars, restaurants, amusements, remote retail, you get the idea. If we look at what's been happening over the last several years, you can see that remote retail or internet-based sales has really skyrocketed. Consumer spending overall, if we look nationwide, is now peaked over $20 trillion. But what we have found is that a lot of that spending has really been fueled by borrowed resources. People have just been leveraging up both credit cards and other debt instruments, whether it's through their house, auto loans, and other vehicles in terms of how they're leveraging up. They're financing a lot of that spending related activity, something we really do want to keep an eye on. We took a look at some of the major sources of overall debt. I mentioned credit cards. You can see that's at an all-time high. Household debt is also up. Seen some moderation on the student debt side. Corporate business debt, all totaled, these are some really big numbers. That corporate business debt of about $14 billion, the biggest contributor there, totaling about $22 billion overall in terms of the debt profile, and that doesn't include our federal debt of nearly $36 trillion. What has contributed to some of what we've seen in terms of the rise in not only spending, but the costs of goods and services is inflation, consumer price index growth. Obviously, the higher the red, some of the greater levels of growth that we had seen at different points in time. Nonetheless, electricity, energy, gas, all of those have been seen some significant increases since what we'll call is the pandemic period, if you want to think about it that way. You can kind of see we've seen some moderation though on the cars and vehicles. That really took off at the height of the pandemic and now has started to subside. But you can see the various growth rates here going across for each of these major cost components. Saving rates are really down around approaching all-time lows at about 4%. We've seen these remain relatively modest as people have been burning through their savings. This is the one we should all be a little bit concerned about, thinking about what would happen if folks had to fund or pay for an unexpected expense of about $1,000. About a quarter of folks say they have no emergency savings. and about 30% of folks, 29% said they have less than 3 months of savings. And this is how people would pay for these types of things. Many would have to finance them either on a credit card or borrow money, take out a personal loan. So 1 out of 3 folks would need to borrow money in order to fund an unexpected expense of about $1,000. The next one I wanted to refer to is the property tax competitiveness. We rank 13th overall, fairly well from a property tax standpoint. We see that adjust a little bit year over year, but still ranking 13th. We were down from about 10th. And if we look at these on a county by county basis, you can see what the effective property tax rates are. These are on average across the board in each one of the counties in Arizona. And then we take a look at where we rank 39th in terms of the property taxes paid. So 39th here is a good thing, relatively low at about $1,900 on average for a house with a mortgage, what they're paying in terms of overall property taxes, well below the national average and well below what you're seeing in some of these eastern states, as well as California. This represents just a small share of the revenues that are generated in Arizona, just under 6%. And you can see it's about $1.3 billion in terms of property tax collections, up about 4%. Home ownership rates really contributing to that, more owners, more value, and what folks are ultimately paying in a number of these properties. You can get a sense the Phoenix market stacks up pretty well here from a home ownership standpoint. Pricing has remained relatively stable as we saw interest rates going up. We saw some moderation in terms of single-family home prices as well as condos and townhouses, but the median price, single-family, still pretty elevated and approaching $500,000. Affordability has really taken its toll, though, if we think about the median income of folks in Arizona, in particular, this one is for Phoenix, relative to the median home price. Just fewer and fewer people can afford the homes that exist today. Mortgage interest rates have clearly played a role in all of that. So those are the summary elements of the overall tax competitiveness that we're monitoring that continues to have Arizona ranking 15th in the nation. Again, we do pretty well from this standpoint. That's why we're continuing to see investments from businesses. We're continuing to see expansion from a number of companies that are already based in Arizona. The last piece of what I wanted to focus on here briefly is the overall cost of living and what that means for folks that are here in the state. Arizona's economy draws in businesses and residents. But those costs really, they are creating challenges for folks. It's becoming more difficult for people to move up. It's getting more difficult for people to move in. Obviously, businesses that are relocating need to have sufficient and available housing for their employees. So that's a critical decision-making factor for site selectors when they're working with their clients in terms of trying to identify areas for their businesses to relocate into. I already mentioned this a little bit earlier, the inflation rate. We think about those headline numbers and where we're at, hovering around 3%. Again, this is not to suggest that prices are coming down. It's just suggesting that prices aren't going up very fast. These are the national averages that we're seeing. And if we take a look at what's happening in Phoenix, you can see during the height of that inflationary environment, I talked about this previously on a prior webinar, that we really saw this massive rise in overall costs, and that inflation rate peaked out at about 13%. Now, on the flip side, we're actually experiencing a lower inflation rate than we are as a nation as a whole, so at about 1.6%. Still, prices are much more elevated relative to the nation as a result of that cumulative effect of prices continuing to rise. If we look at overall inflation relative to earnings, again, now we're starting to see the earnings rates of increase exceed the rate of inflation, meaning consumers should be getting ahead a little bit more on a year-over-year basis. But again, cumulatively, it remains a challenge for folks. And so if we look at the major handful of Western states, this is a year ago in terms of where Phoenix stacked up relative to the nation, about 1.7% higher overall cost of living. So pretty favorable for companies that are looking to relocate from the average or typical market across the United States. Obviously, areas in California like San Francisco, LA, San Diego have been experiencing and will continue to experience much higher costs of living. Salt Lake and Denver, a little bit more competitive. Las Vegas, in this particular metric, will happen to be 1.5% below the national average. And then if we just looked at the latest cost of living index values relative to the nation as a whole, Phoenix is up about 7.2% over the broader average, and you can kind of see those rankings. Not a lot of movement there, just a little bit higher as we've seen the cost of housing escalate. As that's a key component of the overall cost of living equation, as well as healthcare needs and those sorts of things that have really edged up impacting people's wallets overall. So sort of walked you through the economic competitiveness, tax competitiveness. What are the costs looking like? What does this all mean? I just wanted to point to you this particular metric, going back to that economic competitiveness report. They actually have the state of Arizona looking in the top 3 in terms of its economic outlook. So that's a positive in terms of the expectations going forward. The fundamentals of the economy remain relatively stable. The overall structure of the economy remains sound. I talked about some of the tax-related elements that remain more favorable than other areas, but overall, that puts the state in a pretty positive position, and the expectations are that we'll continue to see growth, we'll continue to see positive activity going forward. Here are just a couple of key metrics that we like to focus on, where we're at today and where we're headed going forward. These are really things that we should take note of. Most of these are in positive territory. So personal income growth, yes, it's going to slow a bit, but still remain relatively strong from an income growth standpoint through this year in 2025, above 6%, and then a little bit of a slowing from there. Retail sales are going to moderate just a little bit, but stay ahead of where they have been, and see some growth there in the 3 to 4% range. Job growth remaining relatively stable. We'll see that slow a bit as we see the economy continue to stabilize. Population growth remaining strong. Again, this is not uncommon to see some slowing rates here. We're seeing this nationally as well, but population growth remaining strong. And then residential building permit related activity. Yes, these are off a little bit. We're still talking about pumping out over 50,000 homes in 25 and in 2026. So again, some pretty strong development or construction related activity to house the growth that we're going to continue to see going forward. Areas to watch impacting the overall competitiveness. I think it's really important to think about some of the shifts that we've seen. Obviously, the presidential election. We now have a new administration in place, seeing what those policy decisions ultimately look like. Are we going to see some massive runaway tariffs? Are we going to see tax policy that shifts the thought process and the investment that businesses are willing to make? There's a lot of positives. Obviously, there's some other areas we want to keep an eye on, but there could be some impact related to things that we see at both the national level, but we also want to keep an eye on what happens at the local level. Labor costs are going to be important. How we handle our tax environment, the demographics, the shifting of demographics, the aging in of folks that are coming into the market and impacting, the demand for services, but also having an impact on the overall housing market. And then just more broadly and generally, some broader risks that exist out there. We want to keep tabs on that going forward as well. So, I think as we sort of kick off 2025, I think there's a lot of things to be optimistic about. There's a lot of promising things to think about on a go-forward basis. We think about the impacts that we were facing just a couple of years ago and concerns about a national economic recession. I think we started to see that dialogue shift back the other way. Nationally, we're seeing about 1 in 5 economists through a Wall Street Journal survey are suggesting there's the potential for a national economic recession. We haven't seen that yet, and that's a sharp contrast from just a year and a half, 2 years ago, where 2/3 of national economists believe that we would be seeing or experiencing some sort of pullback in the economy or correction. So I think the expectations are that we're on much more stable footing than we were before. So that wraps up my comments for you here today. I really appreciate you joining me. Keep an eye out for our next edition of the Economic Briefing and Market Update. Hope you all have a good rest of your day, and thanks for joining me today. Take care.